What's going on, YouTube? This is Vinny from the Investment Club, and today I'm going to be comparing a dividend ETF to a total market ETF, and I'm going to be using Schwab's funds for this example. We're going to talk about some differences, which one may be better for you, and some risks. So if we look at the Schwab total market fund summary, we see that this ETF seeks to track the total return of the entire US market. It invests at least 80% of its net assets in these stocks. It generally gives the same weight to a given stock as the index does. While if we look at the Schwab Dividend ETF, we see that it seeks to track as closely as possible the total return of the Dow Jones US Dividend 100 Index. And this fund generally invests in stocks that are included in the index, and it's designed to measure the performance of high dividend yielding stocks issued by U.S. companies that have a record of consistently paying dividends, selected for fundamental strength relative to their peers. So let's look at the charts of both of these funds to compare their returns. As we can see, they look pretty similar from the outset and have both gotten good returns. Now, if we compare the charts over the longer term, you'll see here that the Schwab Dividend ETF has actually been much more steady and consistent, whereas the total market fund has had a lot more volatility. As you see, it's going up and down here. But to be fair, the Schwab Dividend ETF has only been around since about here. So if we compare the two funds from around 2012 onward, they do have very similar returns, and the total market fund has been relatively steady. Like the content so far, please don't forget to like and subscribe. I would greatly appreciate it, and it would help me pump out even more content geared toward your interests. Now, if we look at a further breakdown of the fund's performance year by year. So the Schwab Dividend ETF is down nearly 9% year to date. In 2019, it got a little over 27% return. 2018, it was down 5%. 2017 made 20%. 2016, 16%, and so on. Now, if we look at the Schwab Total Market Fund here, you'll see year to date, it's only down 3.5%, which is less than the dividend ETF. In 2019, it made over 30% return. 2018 down 5%, 2017 21%, so on 12%. So this fund has been around longer, as I mentioned earlier, and overall, it's definitely beaten the dividend ETF. So now I want to compare the holdings of these two funds. If we start here with the Schwab Dividend Equity ETF, we see how they are weighted by sector. And this is pretty similar to the total market fund sector weighting. You see some slight differences. It's interesting here to me that the dividend ETF has only 0.01% of their holdings in real estate. There's a lot of great REITs out there that pay great dividends. Some of them are even monthly dividends, which let me know in the comments below if you'd like to learn more about those. I own a few. It might have something to do with qualified dividends, as they may not be qualified dividends. So let me know if you know the answer to this in the comments below. Anyway, the total market fund has a much bigger concentration in tech. There's 13% in the dividend ETF versus a little over 22% in the total market. Tech has obviously been carrying the market, as we know. If we take a look at the top 10 holdings of each fund, you see here that in the dividend ETF, the number one holding is UPS, then PepsiCo, Qualcomm, and so on, versus if we compare it to the top 10 holdings in the total market fund, you've got Microsoft, Apple, Amazon, Facebook, Google, so on. So definitely very weighted toward tech in the total market, but these are all great companies. If you were building a team of extraordinary companies, which 10 would you be picking? The 10 from the dividend ETF or the top 10 from the total market ETF? Me personally, I'm taking the total market ETF companies every day of the week. The top 10 companies from the total market fund are the bee's knees these days. They're not going anywhere. And in an ever-changing world, I would actually feel safer owning these companies instead of the ones from the dividend ETF. They're much more adaptable, and I think have the potential to be around far longer than these old-time dividend companies. Let me know what you think in the comments below. Many of these top 10 holdings in the dividend ETF have already been underperforming the market for years. So what's the better option? Well, this is largely up to you to decide. Since I'm young and I have a long time horizon, I want to get as much growth as possible. If you want to take a more conservative approach and you just want steady cash flow that you can rely on consistently, you might want to look into the dividend ETF further. So does the dividend ETF belong in a dividend portfolio? Again, this is mostly up to you. If you want a strictly passive approach or more stability and less to worry about, yes, it wouldn't hurt to use as your dividend income or in addition to dividend companies you already own. I personally, however, would rather concentrate more of my money in the growth ETF and then buy individual dividend paying companies on the side, like this one, Realty Income. This company is a REIT or a real estate investment trust, and if you'd like to learn more about REITs, let me know in the comments below. This company has a higher yield than the dividend ETF. As you can see, it's over 4.4%, and it also pays a monthly dividend, whereas the dividend ETF is quarterly. Let me know your thoughts in the comments below. If you like the content, please remember to like and subscribe. This is Vinny from the Investment Club, and I'll see you next time.